Hello everyone. Friday's stock market session was an overall very positive experience as stocks actually opened up the morning, gapping down, selling off a little bit more, but then reversing and climbing throughout the session to close near the highs of the days on volume heavier than the session before on the NASDAQ. And as you can see here with this blue line, a pocket pivot point signal. Now I want to reiterate what we have just seen since basically the highs back here in December, but more dramatically at the end of December, to the February lows, from the February lows to where we're at now is insane. It's really crazy. So if you're finding yourself like doing poorly in this market, it's okay. Do not beat yourself up. If you're doing well in this market, awesome. Congratulations. We're outperforming the market currently because our long positions are doing very well. But at this point, considering how many long signals we've had since the February lows, I should be doing much better than what I'm currently doing. So there's a lot of room for improvement, but the NASDAQ still overall is down 1.85% for the year. And as you can see, volume still remains below average. But I tell you what, the last 4 days, it's been much higher than those recent 2 days of selling and the overall, I guess, selling you can say going back to the middle of March. So some solid accumulation, and hey, at least we have a flurry of pocket pivot point signals. The NASDAQ 100, same similar situation. Excellent rally off the lows. Barely any consolidation, a little bit here in March, but that's barely consolidation. I mean, I'm talking about something that lasts, for more than a week. And not any real accumulation, and the Qs confirm it. And then you have the S&P 500. The S&P 500 consolidated today up 0.63%, trailing the NASDAQ. It shows volume lower here, but the volume in MarketSmith is higher than the day before, and I always trust Investor's Business Daily figures. They both track volume differently. I forgot how the one or the other does it. I don't care. Bottom line is the rally is pretty long in the tooth here, and it would be, well, as we've been saying for a while, logical to think that we're going to need to pull back and get that 50-day moving average to catch up to price. I don't see how we can just continue to zoom higher with the 50-day moving average so extended, but you never know. The NYSE, similar situation, but at least it's kind of consolidating more. And as you can see, looking at the SPY, once again, no accumulation whatsoever. And then the Dow Jones Industrial Average on Friday, solid gains, and once again, another pocket pivot point signal. This has been the craziest of them all. Straight V-shape shot. Pretty crazy. And it's up 2% on the year, and it's leading. And the fact that this index is leading while on the other end, the Russell 2000, still for the year-to-date total is down 1.60%. It's kind of telling of kind of where we're at probably in the market cycle, considering that we've been backed by quantitative easing and easy money since the end of 2008. So, take it as it is. That's why we haven't got any perfect signals, have never been able to load up in any cancel quality long, but hey, at least they're showing up. But the one craziest thing about this past quarter is that the drawdown from the highs to the lows in the Dow Jones Industrial Average, and then closing at a green for the quarter whenever it went out at the end of March green, that is the biggest drawdown to green close ever in the Dow Jones Industrial Average history. It was over 11%, and that has never quite happened before. That has never happened before in the Dow Jones Industrial Average, and never really quite happened before except from the S&P 500. It had a bigger drawdown in 1933. So this drawdown in the S&P 500 back to a green close for the quarter is the biggest move since 1933. And you know how the 1930s went, so should be interesting to say the least. The most interesting fact of everything is despite the gains this past week in the overall stock market over the past 5 days with the NASDAQ up nearly 3%, the bulls and bears on the AAII survey came out, and bulls actually fell to 27% and bears actually rose to 25%, with the neutral camp around 50%. That's crazy. So nobody's buying this rally. So if it can even get more V-shape, it's got the sentiment to be able to do that. Now on Friday, unfortunately, the gap down in the morning scared me out of a trade that I wanted to put on that I screwed up because I didn't take it. PRMW, it broke out, and if you look at the fundamentals on PRMW, look at the earnings growth. Absolutely fantastic. Look at the sales growth. Steady, a little low here in the most recent quarter, but you can see estimates. They're very, very strong. Very strong chart pattern. I did enter limit orders at the previous breakout highs, 1993. So I put limits in at 1994. Before the market opened, I got scared off and I decided to remove my limit orders. Whoops. It traded down to 990, traded all the way back up to 1090 and closed at 1075. Big mistake. See, this is a beautiful breakout, and since I didn't send any buy stops here, it's a perfect volume contraction pattern on a very strong stock with good earnings and sales growth. I didn't set buy stops, though, above the most recent highs, so I missed the breakout, but you can always put limits in like I did. But the gap down got me mentally, emotionally, and I missed my limit, so it's a lesson learned. But PRMW, excellent. I'm going to go ahead and put a limit back on, this time at the low a day of the low, 994. If it hits it, great, but 990 is where I'm going to put it. And then also one of the 99 EPS stocks that was also a perfect speculator that I've been watching, Stamps.com, that's failed, so I'm no longer interested. One of the 99 EPS stocks I'm watching, ABTX. Let's just show this really quick. You can see its earnings and sales growth and estimates, and you can see what it's looking like off the lows. Tons of pocket pivot point signals. So this one's on my radar, but it's very thin. But watch this one. It has a 99 EPS rating, so very interested in it. And then also some other stocks I flagged on Friday to show you how strong the market is. Starbucks, HFFC, another thin one, but you can see strong move. Edwards Lifesciences breaking out with a pocket pivot point signal and strong volume. Would like to go long, but you know, I'm spread pretty thin in a lot of names right now. I'm kind of looking for a better signal, as you'll see later on in this video. MPWR was going to have this as a new long signal the previous day, flagged it, passed on it. It's following through. Technically, it's still making a big cup or saucer pattern, or base on base pattern, if you will, with this being base 1 and this being base 2, but very strong looking consolidation pattern. And then RDUS off the lows. A lot of pocket pivot point signals, strong accumulation. This used to be a perfect speculator scan stock, so that's why I'm paying attention to it. And then passing tonight on HE, this weekend I should say, HE. It's too extended from its 50, 200, and 20-day moving average since it's not touching it with the 50, 200 at what far. I'm not interested in it, even though I live on Maui. I could care less that it's based in Hawaii. Don't care. So passing on HE, also NVRO is back in the perfect speculator scan. Huge sales growth, so keep an eye on this one. NVRO. You can see that really accelerating recently in the past 4 quarters. So those are the big ones to go over. And then let's go over the new long positions. Quality names. COKE, CanSlim Quality Stock. Former perfect speculator scan stock back here. Came a couple times in the scans here, and I think it showed up a couple times whenever it was trying to get back above 5,200. But big volume off of its support levels. Previous big support on the 29th. So there's a new long position, 2% for CanSlim, 1% for being confirmed in the price volume BOP scan, total 3%. ORI, very nice pocket pivot point signal right off the 50-day moving average. Nice long saucer-like pattern. And if you look at the longer term chart, I even like this better off the 2011 lows. You can see the stair stepping and the slow, steady accumulation. And it's all kind of coiling right here. So this could be a larger measured move higher than the previous uptrend. But ORI, CanSlim, confirmed in the price volume BOP scan, also 3%. And then Cores, former CanSlim quality stock, also leader still overall in the retail space. It's in my pre-perfect speculator scan, and it's creating a pocket pivot point signal, and I know volume's below average, but as you can see here, the 10 and the 20 and 10-day moving average are right on top of each other. I wish the 10 was above the 20, but you know what? They're so tightly coiled that I'm fine with it. Pocket pivot point signal after all that low volume sideways trading action in March. Good to go on that volume surge. But Cores was only in my perfect speculator scan, so it's a 2%er. And then I have some speculative names. GRAM is a speculative name producing a pocket pivot point signal and very strong volume with the surge in BOP to max green. It was only my price volume BOP scan. So with this market overall, and since this one isn't perfect, because as you can see here, while the 10 and 20 are perfectly aligned, this stock was only in my price volume BOP scan. So I would like to have seen it confirmed in one of my BOP scans alone, and then I would have definitely increased it. But 1% for Graham. Also PZE, another ad signal, another pocket pivot point signal, 0.5%. And then EBR, another 0.5% with that volume surge. And ZVIO, it's 100% sell, with it finally failing below its recent lows. EBR, the most recent lows here in March. That's the final sell stop. With PZE, it's the 622 level here. With Graham, it's these recent lows right here. And then with Coors, obviously, it's these recent lows for the final sell stop. ORI, this low right here, or this low. It's completely up to you. I'll be using this one. And then Coke, obviously, the most recent lows in this space.